Should you sell your investment in rental properties right now? This may be the best market to make a shuffle in your portfolio. And yes, even Warren Buffett does it, and we're going to talk about that. Plus, stick around to the end where we cover potential changes in the tax law that make this the single best time to make a change. Hey there, Christian Walsh, Wire Associates. We're real estate agents based in Southern California, helping buyers and sellers and tenants and landlords navigate these crazy days. And we're here with an update on whether to sell your rental properties right now. And remember, we can't give legal or tax advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. And this video comes from the comments I received when I did another video recently telling people to sell properties that have things like functional obsolescence, issues with the property. In this record market, it might be a good time to sell those homes. I got some great comments in there, including someone who said Warren Buffett said the best time to sell is never. In fact, Warren Buffett actually said our favorite holding period is forever. And this is a great point, but you must know that Warren Buffett does sell things, including real estate. His beautiful Laguna Beach home in Emerald Bay with a huge dramatic ocean view, he sold that in 2018. Now, he did buy it for $150,000 in 1971 and ultimately sold it for almost $8 million in 2018. So it was a great return. But the point is, people do make changes to their portfolios. People's needs change. One of my other favorite comments came from Jason Bay, who's one of the folks who puts a lot of great comments on our videos, and we watch his as well. And he said he will never sell his real estate. He's diamond hands to the end. Well, thanks for saying that, Jason. We appreciate that. But sometimes it makes sense to shuffle your portfolio. So depending on where you are in your investment cycle, and depending on where your real estate is, you may want to make a change. So we're going to dive into that right now. Before you consider making a change, of course, it's important to figure out where you are in your own personal real estate investment cycle. You may be early on in a high acquisition phase. You may be later on in a phase where you need cash flow. You need to have a plan and you need to stick to the plan, but that plan doesn't necessarily mean holding on to every single real estate asset you first invested in early on. It may change over time. So what are some reasons to make a change to your portfolio? Well, one big one is to maximize your return. Maybe early on in your investment career, you're focused on buying what you can afford, which may be condos and townhomes. Those are not the best return on investment as it comes to real estate. With high HOA dues, that eats into your profit. So there are other properties in the investment chain that are going to give you a better return on investment, and it may be time to move up that chain. Move up from condos and townhomes to single family, to duplexes and bigger, and ultimately switching maybe out of multifamily into other asset types. Another reason to make a change, with the big run up in prices we've had, return on equity has dropped. And that's an important concept we're going to share in future videos. But basically, you've got a big cushion of equity and your rental income has gone up a little bit. So your return on that equity that's sitting there has dropped as the value's gone up. So you need to figure out a way, if you're in the point where you're going to grow your portfolio, to where you want to maximize your return on equity. And you may leverage that property or sell it and move into a different property type. And I've mentioned switching asset types. That's what some investors are ready to do. They're ready to move from smaller multifamily to larger, or switching asset type period from multifamily to retail or industrial. So this would be a good time for that. Cash in on the high values we have on multifamily and move it into another asset type, or move it to a different area. It may be time to switch from your local market to another market. Another reason to make a change is to move from more active to passive management. So you can do this by changing asset type or hiring a property manager, but some folks want to move out of tenants, toilets, and trash and move to other asset types. Another big one is personal enjoyment. You are able to do a 1031 exchange into a different property that ultimately you may end up using it at some point in time. So whether it's a primary residence on the ocean front or a second home in another market, there's nothing that says that you can't do a 1031 exchange into that market and some point in time get some personal enjoyment out of the asset type. Another reason to make a change is maybe you're later in the investment cycle and you want to move from appreciation to cash flow. So we'll release more content on this. But certain markets are more about appreciation and certain markets are more about cash flow. So a good example, I'm from small town Ohio. Multifamily and rental properties there trade at a higher cap rate because they are about cash flow. Here where I live in Southern California now, properties tend to trade at a lower cap rate because they're appreciation markets. You get appreciation in value, appreciation in rents. So early on you may want appreciation and later on you may want cash flow. So it may make sense to transition from one market to another. So why make the change now? Well, we've got the housing market 2021 and values are through the roof. So this is obviously a great time to be a seller. Of course, this makes it tough as a buyer. If you're going to be doing an exchange, you may have to move to a different market in order to find a return that makes sense for you. So that's one of the advantages. And if you're going to cash in your chips, we have not had a better market for appreciation than this market. So this would be a great time if you're going to cash in your chips. Another big reason to consider making a change in your portfolio are some of the big changes potentially coming in tax law. The American Families Plan that was released on April 28th, 2021 by Biden may make some significant changes to the tax code that may take away some of the advantages to investing in real estate down the road. So let's run through those. 1031 exchanges may be capped at $500,000 in gain or $1 million if you're married. Now this may sound like a lot in some markets, but in a place like California or even like Warren Buffett's home, you can see there can be significant increase in value. Is changing the tax on capital gains. So there's talk of increasing it from the low rates we have now of around 20% to turning it into ordinary tax on gain, and that's over 40%. And that doesn't include state taxes. If you're in a state that charges taxes, it could be very, very expensive if you're going to cash in your chips, which investors can do. At some point in time, you may decide you've made enough money and you're done and you want to enjoy your gains. There's nothing wrong with that. But you may want to move the schedule up a little bit. If you were planning on doing it next year, you may want to do it this year so you can avoid an additional 20 to 30% in taxes you may have to pay if these changes are made. Another big change would be the inheritance laws. So right now, people typically, unless their portfolio is massive, get a step up in basis on the value as the assets are transferred from generation to generation. If that is eliminated, this could lead to a case where families inherit real estate and owe a huge portion on capital gains. So it may make sense to make a shuffle before you have to rely on a step up in basis. So maybe switch to an asset type that produces more income or switch to an asset type that you're going to enjoy. So these are some things to consider in making a change this year in housing market 2021 versus waiting. Now there is a school of thought that it's already too late, that as of the release date, April 28th, 2021, technically these things would have gone in place when they're passed. So it may be too late. I'm shooting this in June, but it may not be too late. We have another 6 months out of the year to get 1031 exchange done or to cash in your chips. So it may be beneficial. Talk to your CPA and see if it makes sense for you, because if the date is set to 2022, you still have time in 2021. Now again, not all of these may be implemented. They may change dramatically, but it's important to know that these are coming. If you're going to make a change, discuss with your CPA. Leave your comments below. I want to know if you're considering making a change. If you are you going to switch asset type? Are you going to switch location? What are your plans in the next few years for your real estate portfolio? Of course, we'd love to have you subscribe to our free weekly email newsletter where we cover topics like this, plus a whole lot more for tenants and landlords and buyers and sellers, including extensions on eviction moratoria and more. There's a link below so you can do that. Thanks for tuning in. This has been Christian Walsh, Wire Associates, and we appreciate you.